GameStop happened in January of 2021. We were a small company that suddenly raised nearly $300 million or something within the first 18 months of existence, and everything just went kind of crazy. Instead of trying to be for everyone, let's focus on the top 25% of digital natives. And so if you think of where the opportunity is, it's there. Having that very clear focus of who we're for has really been the turning point for the business. The most important thing as a financial services company is trust. And in product design, we actually have this rule of UX over UI. It needs to work before it needs to look good. Yes, we want to make it beautiful, but the very first step that we have to solve for is it working really well? As we build the company, we have to look for moments where we can prove our values with actions. I'm only here where I am now because of also the mistakes I made in the past. It's so much of a better journey and so much more fun if you're a power user of your own product.
All right, Leif Abraham, thank you so much for joining us today, co-CEO of Public. Let's start just like, how did you get into design? Because you're an archetype, you started in the agency world, right?
Thank you for immediately destroying my credibility as a tech founder in the first sentence.
I actually think it's a really interesting archetype. I don't think that. Yeah. But tell us a little bit about it.
Yeah, but you can, like, it is still like a sort of consulting job, right? And as a consultant, you don't necessarily go deep in things, and I think that's always where a little bit the distaste comes from the agency type.
But as an agency person, the grit and the reps are unmatched. Like young people who go through the agency grinder.
I agree.
Yeah.
I think there's a work ethic aspect because in agency land, you're not in control of your own deadlines. In startups and companies, deadlines are a little, they're a vague concept, let's be honest. And you try to hold them, but there's not, other than, you always need this external kind of trigger of why a deadline becomes real, right? And
yeah, if the client's coming in on Wednesday, you better be done by Wednesday.
Exactly. And so you're just forced in the work ethic. You're forced into experiencing these all-nighters and whatnot, and that no idea is really precious. And that volume of ideas matters as much to getting to a quality outcome as just quality of idea as well. And killing your darlings is something that you become very comfortable with very quickly. I think in that world.
Yeah.
Which I think is a good trait. Generally speaking.
I agree.
Or it's a good experience. It is a good piece of life experience that will help you.
So talk to me about how you went from agency into Founderland.
Yeah, I had this thing when I was literally a child in my kids' room. I taught myself some design with a pirated version of Photoshop and whatnot.
Right.
And started building websites, taught myself a little bit of PHP, HTML, and build websites about video games out of my kids' room. I was literally 13, 14 years old when I started doing that. And then did a bunch of sketchy things on the internet on how to make money through different affiliates, schemes, and all that stuff.
I love how there's schemes. Those are actual business models, but you're to designers, oh, it's a scheme.
I will not describe on a public podcast exactly what I did there. But that essentially then got me into, okay, so after high school, what should I do? And the path then of what I what should I study? Then I was then just design. Cool, I'm kind of already doing this, so let me just study design and then figure it out from there. And so that's why I started doing design. I went to design school, officially 3 years, unofficially just 1 year, because after the first year I was just so fed up with the theoretic, which is just the theory of it, that I then actually started an agency job when I was 18 or so in Germany. And that's where I started the agency job, joined there as a design role first, was still enrolled in school at the same time. They had the intranet built in the partner school in China and whatnot, and that completely actually crashed one day, and so they lost all the data, and I didn't go to school anymore. I was still enrolled, but I didn't go to school anymore. And then essentially one day I was okay, let me just sign up for my little kind of a master thesis type of project, that you have to do at the end of design school, even though I didn't go to school for 2 years. And they couldn't prove it because all the credits were gone and all the data was gone. And anecdotally, obviously everyone knew I never went to class because I was already working in this job, but no one could prove it. And so I just clicked that button, and then I think they just closed their eyes and was okay, fuck it, let's just have him get this. And then I graduated with honors, even though I didn't go to school for 2 years.
Oh, your database must have deleted me. Is that right? Because I haven't seen you in 2 years. I have that familiar face that maybe you overlooked.
Exactly.
Yeah.
Exactly.
Incredible.
Anyway, so that happened, and then that's how I ended up essentially in agency land. And then agency land brought me to the US, and I spent maybe close to 10 years in agency land, to be honest. Ended up in San Francisco working more with startups and stuff. And then I was kind of like the king of side projects, call it. That's how I just like always tinkered, and just building my own things and my own apps and products and so on. And then that kind of got me back into like, man, what I'm doing in agency, I'm kind of pissing my life away. I should build something. And that's where I then joined Prehype, which is kind of like an incubator in New York. And then I had this little handshake deal with Henrik, who's the founder of Prehype, of like, hey, okay, I'm going to join Prehype. You're going to help me get some cash flow with some consulting projects. But at the same time, like, I'm going to start a company out of this. And that's when where Enco came out of, right? And that's how we met, right? Through the Enco fundraising and you being an investor in that as well.
That's actually a really interesting, you kind of glanced over it, but I actually think it's a very powerful tool in a designer arsenal, which is if you want to start a company, there's so much demand for freelance design work right now. And if you're good, it's good money. And you can do it in a way that frees you up with the rest of your time to explore concepts, ideas, startups in a way that a lot of other people might not have that ability, where they have to have a full-time job or they have to like go and raise money to earn income or whatever. But designers have this ability to do that if they wish.
100%. And I think the other thing is that from a skill set perspective, you can make something with your own hands from scratch and you can test it.
Right.
You don't need to hire someone or pay someone else to do it for you. And so I think that duality is, I think, what makes it so powerful, because you can just make stuff.
And now it's really easy to make stuff. Right.
And now it's really easy to make stuff.
So
exactly.
As long as if you're the designer director of the thing and you have engineers at your disposal with these AI tools, it's just a really great time to be doing that approach. Okay, so you're like, okay, I think I'm going to start a company. So tell us a little bit about what Enco was and kind of what you thought would work, like what didn't work out with Enco.
So Enco was what we called freelancing software, essentially software that help you run your business as a freelancer. So like a SaaS tool, typical subscription product, invoicing, payments, contracts, task management.
Conceptually, tons of freelancers out there, they need these tools. It seems like it should be a thing that you could build a big business around.
Obviously, where it came from, it was like, we did this thing, and then we had this issue ourselves, and we built the product for ourselves.
Right.
The one anecdote I always now say about this, it's like, that was all true, but the minute you started the company, you didn't have the issue anymore. And so you ended up building a product that you'd never use yourself. And I think that is generally tough. And that's what I love about doing public now, which I'm investing app for anyone who doesn't know. And is it like, I'm a power user of my own product. And I think that is a very powerful thing if you find that as a founder, where you can be a power user of your own product.
Like there are plenty of people who build big companies where they're not the end user. We have some. What happened once you stopped being the user? Like what did you get wrong with Enco? What were the assumptions we made that were off? Or was it execution, or was it, I don't know.
I would say it's two things. Number one, distribution to freelancers is very hard, because there's very few pockets where you can like truly acquire them. And so like performance marketing doesn't really work for that, because like trying to target freelancers with performance marketing, like at least in my experience, doesn't work out. And then second, it goes into pricing, that it feels like you're in a B2B product, but you're kind of a consumer product, because the money that a freelancer spends is their own money.
Right.
It might be coming out of their LLC or whatever, but any money they spend in a professional capacity for any tools or whatever is money that comes out of their own pocket. And so their pricing sensitivity is the same like their pricing sensitivity as a consumer. And so pricing becomes really hard, and it's like you're ending up doing these things where it's like $20 a month, $30 a month,
And you need a lot of people.
You need a lot of people to make that a big business. I mean, like under Fiverr, then we grew to like, what was it, like $1 million or something, ARRs, whatever. Like it wasn't like anything major, And it's really tough to like make that a large business.
Gotcha.
And then you end up with a profile where you have like 3-year lifetimes and such. And then like your payback model becomes tough, and you really have to grow through hustle and partnerships and all that kind of stuff, which is what we did a lot of. That was like the main way of how we grew. But man, it's a grind.
And so talk to me about the transition from Enco to public. There's plenty of people who they do a startup, it doesn't work, and they're like, well, forget this. I'm done with this crap. Talk me through the journey of post Enco and into public.
So we ended up selling Enco to Fiverr. Flat outcome, and then the Fiverr stock went bonkers. And
yeah,
I don't know when you sold your stock. You could have made some money on this deal if you held on to the stock until 2021.
Who's interviewing who here? Okay, so you get bought by Fiverr, and then what happens there?
Exactly. And then Fiverr earn out. I think we had an 18 months earn out or something. And then obviously as you sit there and so on, you also immediately start thinking of, okay, what's next? First, Martin and I, my old co-founder in Enco, had a bunch of ideas that we're playing around with and this and that and whatnot. And then my friend Yannick, who's my co-founder in Public here, moved to New York. He also sold his company. And so suddenly like the stars aligned of like, we both became sort of free agents at the same time, which is I think something between founders is like very, very, very rare.
It's like the person who has always had a boyfriend and you've always had a girlfriend, and then all of a sudden, you know, it's like the timing never works, and then one day it does.
And suddenly becomes single at the same time, and you're like, wow, the universe.
We should get married.
And so yeah, exactly. Now he's my work wife. Yeah, and then like one thing led to another, and he was in fintech, like in like trading fintech, like pretty much all his life, and so he had like a deeper sense there. Yeah, and then we kind of came together to do Public. And there was like a few things floating around, like we had the chance to like get into this thing which already had a broker-dealer license and whatnot. And so we kind of dabbled in first. I actually invested in it first when he already started working on it.
Oh, so you started as an investor.
And that kind of gave me the air cover to work on it as well on the side. Because I have my earnout at Fiverr, and I was like, I gotta, you know, I have a child at home now too, right? I was like, let me at least get that payday. So I stayed through the earnout, and then literally one day after the earnout, I left Fiverr, and then officially showed up at the Public office. The main thing of how we looked always at the market of investment platforms is that this cohort of investment platforms that we kind of also are part of, like the new brokers, so to say, has always been very focused on speculation. Crypto-only products, options trading, CFDs in Europe, which is like a even more leveraged option, you can argue. Whatever that like next generation's Schwab would be was not yet created. And so we were like, okay, can we create something that has a beautiful design, but also has the chance to be something that can actually take part of the great wealth transfer? Because in order to get that, you have to be a serious financial service, right? You can't be some casual trading app or something. Like you have to be a serious financial service where someone feels they can put their life savings into, that they can trust, you know?
Yeah.
And that was kind of really like the opening we saw in the market.
Interesting. So I didn't realize the vision was to be more of a Schwab and like a trusted. If that's the vision, because I remember we talked about it, the social piece was a big part of it. You said like, hey, I think people they're kind of doing this on their own. And I think you had a pulse on that because, you know, I do think the Reddit community, you know, there's like these like Reddit communities where people are doing this stuff in a very social way now, but they're doing the speculation that you're talking about and these like get rich quick schemes or, well.
I wanted to say, I think there's a lot of investing communities out there who are very sophisticated. Even if you look at the original thesis on GameStop that was posted by Ronan Kitty and stuff, like this is sophisticated stuff. Like this is not someone who's just like YOLOing on something. You can disagree with the analysis, of course, but it was pretty sophisticated stuff, right? And like well researched and whatnot. That exists as well. The YOLOing speculation, of course, and the culture exists very much, but I wouldn't say that that's like a general saying of like social investing online that equals that. Yeah, exactly. And like we started with that social piece as like one of the core differentiators essentially, and we had like two things. Number one, we were the first to do fractional investing, so like buy any stock with any amount of money versus having to buy with shares. That's like baseline normal now.
Yeah.
And then on the other end, it was that social layer. What we learned then was that social had amazing product market fit with people who were newer to investing, but for people who were already more sophisticated and so on, at least that social feed that we had in the app didn't lend itself too much for that kind of content and so on. And then we were playing with like long form content posts and blah and whatnot that didn't really work out. And then what happened was with the rise of AI, and we were like the first to basically embed like a AI research into the app like 3 years ago now soon, was that it started cannibalizing some of the like main use cases that social was for. So like one of the core post types on Public was things like an earnings call breakdown, right? Some earnings call happened and a user goes and it's like, oh, yada yada just ordered, reported earnings. Here's a quick recap and like my 2 cents on it, you know? Those, for example, are things where like AI does it faster, more accurate, no bias.
Explain this earning call so that to a 5-year-old and it just crushes it.
Exactly. And so now, on Public, when earnings call happen of something you own or follow, like you get that recap in the inbox the second the call hangs up, right? And so it has kind of cannibalized the social piece. And then what was left was like this like shadow thing, which just doesn't lend itself really for like, more sophisticated investing. And then what we really did was this like beginning of 22, right? Because 2021 was the phase where it all went bonanza, our first full year in market. GameStop happened in January of 2021. We were a small company that suddenly raised nearly $300 million or something within the first 18 months of existence. And everything just went kind of crazy. And then obviously at the beginning of 2022, you saw the correction kind of coming in from the markets. And it became also this thing where like just obviously every startup was like, okay, the free money days of 2021 are over. It was fun as it lasted and we were all totally high on free money. But we gotta all like figure out our business now. As we did that obviously as well, the main thing that happened for us was really this like, instead of trying to be for everyone, let's focus on the top 25% of digital natives. They're gonna inherit 85% of the great wealth transfer. And so if you think of where the opportunity is, it's there. And therefore then having this like very sharp clarity of who you're for, and then that impacts how you design, how you write copy, the density in the app of like, is your table and the font sizes and how much information you might put on a screen or not? Is your account balance a big, bold number a la Cash App? Or is it, you know, a little smaller and a different, thinner type? And like, literally things like that, like...
Yeah, it's almost like a Bloomberg term, like the Bloomberg terminal for everyone.
Yeah, but like where it becomes this thing where it's like, yeah, you need to balance sophistication and simplicity in a way because it can't become complicated, but you can also not look too simplistic where it seems that the experience is dumbed down. Striking that balance from a design perspective is really what I think was super important for us to really make that move into this like more top quartile, people that have some financial literacy, people that are a little bit more sophisticated, that you know, read the financials of a company before they invest in it, right? And care about those things and track the markets. Having that had a very clear focus of who we're for has really been the turning point for the business.
When was this that you guys doubled down on that kind of archetype?
I would say beginning of 2022. And then if I would now look at my cohorts, I would say the 2023 cohort is the first one where you saw like really like a major jump in like deposit sizes, revenues, gross profits per user, like everything just started ramping. And since then, every cohort we acquire is better than the last.
Wow.
And all the charts just keep pointing up to the right. Deposit sizes are becoming bigger. Age has gone up slightly also of users.
What is the average age of like a public user?
38.
38, wow.
If I point like what was one of the most important decisions that we've done in like the time of building public, it was that. It was the decision of level up as a theme inside the company. When we did that, we also told the team, this is going to be a 2-year exercise. We're not going to see results of this for another 2 years likely.
Wow.
We're a little quicker than that. But, and then having that very sharp clarity of who you're for, that was really the turning point for us.
And so I would also think that when I think about building that kind of institution, the Schwab for the next gen, that's serious about money management and all that, it has to go beyond the app. Have you also seen, because you started as just like an iPhone app, have you seen also kind of people accessing this more from the desktop and it feeling more of this like robust platform?
Web is now our second largest platform by usage. iOS first, web second, Android third.
Yeah.
And again, it also makes sense because iOS users tend to be more wealthy than Android users on average.
Interesting.
That is another kind of interesting insight there. We've invested heavily into the web/desktop experience.
Like even emotionally, the idea of putting a lot of money in an iOS app feels off to me. But if it's like, oh no, we're an institution, we have a desktop, we have just like your bank, that makes sense from a experience design standpoint. That's how it works. So talk to me a little bit about how you're bringing design into the like product development right now. Like, so I think how does it manifest also in the work itself? Given that this is like a crowded space, how do you actually how do you do that work?
Super high level, the most important thing as a financial services company is trust. I think trust comes from different things. It comes from reliability, and which means literal reliability of like, is the app working? Is it up? Is customer service responding to me? Then in like a nerdy design perspective goes into things like when you execute a trade, how does it feel? How quick is the confirmation coming in, etc. And in product design, we actually have this rule of UX over UI, where it needs to work before it needs to look good.
Ah, interesting.
And so like, yes, we want to make it beautiful, but the very first step that we have to solve for is it working really well? Do I understand what's going on? Does it have everything I expect? Is it quick? Is it fast? Is it reliable? Is my design system perfect that, it's not like everything is kind of presented slightly differently in every single screen, etc. And so like this rule of like UX over UI is something very kind of like dear to us. So that's one. Then on the other side, because that's also a little bit more like the rational side, of like, is it working? Like, can I expect from it? And then on the other side, you have like your kind of more emotional side, where it then goes into, do I believe this is for me? And one level even deeper, is it like, do I create an emotional connection with this company from a perspective of that they do things the way I appreciate how they do them? And that goes a little bit on like ethics and transparency and so on, which again all feeds to trust of like, do I think I'm being screwed over here, or are they super transparent with my fees and how they make money and what their incentives are? And I had this little concept I always talk about of like, there's utilitarian retention and there's emotional retention. And utilitarian retention is, I stick with the product because I like how it works, I like that pricing is the way it, is cheap, and, it has the features that I want and whatever. But on the utilitarian retention, it's easy to compete. Some YC startup comes out and figures out a way to make it freer than free. Your competitor hires a better designer and now it looks kind of nice too. You launch a feature and then, 6 months later, your competitor launches a feature too. And like, so you're always in this hamster wheel of like, you're never complete, you're always jumping to the next thing, etc., etc. And then even from like a marketing perspective, if you then suddenly end up always advertising too heavily just on the utility and the features, your positioning becomes essentially not clear, because it changes all the time. Because you're suddenly always jumping on the next shiny object of like, what are we about now? Well, now we're about this new thing we've launched. And you're getting to this kind of like sense of the like next feature fallacy of like, but when we launch this, then everything is going to go awesome, And then on the emotional piece, it's a sense of like the emotional retention. It's like you stick with the product because you have an emotional connection to the company. And that is obviously more vague and whatnot, but that is built by the actions that you take as a company throughout the life cycle of the company. But I always kind of talk about a sense of that as we build the company, we have to look for moments where we can prove our values with actions. I'll just talk about them in marketing and say that we're serious or whatnot, but what are the actions that we're taking? What are things that we talk about of the features that we are launching and excited about? What are the ones we're not excited about? Let's be vocal about that. Like we just literally ran yesterday a little ad in the Wall Street Journal, which was like, if you're looking for a broker that's not also your bookie, you should try Public. Obviously, it's a poke at, having sports betting in the same app as your retirement account. But again, what that is, it's a moment where you can prove your values with actions, and you can take a stance and so on, and you can create essentially an emotional connection with someone that is deeper and stronger than just the utility it provides. That, again, I think from a business perspective, then creates things like pricing leverage. Because suddenly like you're sticking with something because you're a believer in it, and you're also potentially even becoming an advocate for it, where like suddenly people will rally on your behalf, right? Like if, we meet each other in a bar and you pull out the other green app, my reaction shouldn't be like, oh, like I like Public more because, I know they give me a higher interest on my cash, or or whatever. But the reaction should be like, whoa, what the fuck, Ben? You should switch to Public. Here's why. Dung, 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 dung. And those bullet points, like those are essentially like mostly these like more emotional points.
I thought you were serious about your money.
But seriously, right? And it more becomes this thing of where there needs to be an identity around the company that I can associate myself with. Therefore, it becomes something that I will rally for. And that's the best marketing that you can have if your customers have such an emotional connection to the company and they feel it's so much for them and it represents them as a person that they then suddenly become your kind of advocates and like, and they start to rally on your behalf.
And you see like where these things start, like there's a couple companies that come to mind where you're talking about where the emotional connection is so strong that it perseveres. You can actually fuck up product stuff for a while. So for example, I remember there was like a friend of mine, and I saw he had the new like iPhone 17 Pro. And I was like, oh, you ended up getting that? And he's like, yeah, it's shit. And I was like, well, why'd you get it? And he's like, I'm an iPhone. Like, what do you want me to do? Not get it? He's like, I'm an iPhone guy. Like, do you know what I mean? It doesn't even come to mind that I would get an Android. Like, of course not. Like, I'm an Apple guy, I'm an iPhone guy. They come out with a new phone and I just get it. And hopefully the next one's better, but this one is shit. And he's down to do it. And the even more extreme, like there was a woman I saw last week. She's driving her Tesla. Over the Tesla logo, she has the cross out symbol. You talk about the emotional connection. She's totally over it. And she wants to let you know, like, this thing I'm driving in, I hate this company. And yet, for whatever reason, the product is so good for her that she's willing to overcome all that other stuff and still drive it. But she wants to let everyone know this thing is not, I'm not behind this company, but I'll still drive the thing because it's that good. So it's like if the brand's so good sometimes that you can get away with shit product. And sometimes the product is so good, you can get away with shit brand. But eventually those things, you'll run out of goodwill on either side. Ideally, you're doing both of those things well.
Yeah, exactly. And best case you have both, right? The goal should be to have both.
Talk to me a little bit about the future. Like when you think about what's next for you guys, where does it go? What are some of the other pieces over the next year or two that you want to start adding to it?
As cliche as it sounds, I'm really sorry. Obviously, AI will have a massive impact on how you invest. There's a few things we're doing there. 2-3 years ago, we've launched in the app like an research assistant, which basically means like you can swipe down on any stock, ask any question about the stock. They became more proactive. The earnings code breakdown is a good example. Now though, where we're going next is a sense of the ability to create new assets with the help of AI, and then the second to automate actions with AI. The first is what we call generated assets, where it's essentially you can prompt the app and say, give me companies with
designer founders.
Exactly, with designer founders.
Yes, the designer founder index.
Yeah, you can do it right now.
Oh, baby, I gotta do that. There was like a famous financial institution, I forgot who it was, but they like did this work of public companies that value design. They didn't say like designer founders, but that value design outperformed the market like by 200% in their research.
Yeah, of course.
So you can create that index now for yourself or for anyone to use?
Both. You can share it, and then other people can also fork it and edit stuff and so on. But it's really essentially like disrupting ETFs, right? ETFs been created 30 plus years ago. There's like 4,000 out there. And, there are like thematic ETFs now. There's structured product ETFs with like options in it and what kind of stuff. But this is really basically enabling you to create a fully personalized asset that you and other people can invest into. And, you have full control of it, essentially, right?
That's really interesting.
Obviously, it's not just thematic, but it's also things like, give me companies that have large user bases, but low monetization on these users, like low ARPU. AKA, like, there's a lot of growth potentially in the existing business by itself. And then it creates your generated asset. And it's like a new thing that sits in your portfolio the same way your S&P 500 ETF would sit in your portfolio. That is, one thing. And then the next one is really creating, essentially, agents that can manage your portfolio on your behalf. There you suddenly dive into things like, okay, whenever I have more than 20 grand in my checking account, move it into my high yield account on public. And from there, dollar cost average into my top 3 positions in my portfolio whenever they're trading below PE ratio of 30. And then that is a workflow that exists. You approve it, and then it's running.
This is where I struggle. So I think on the creating your own, amazing. I think because AI often like breaks down or hallucinates or any of these other things, I have such a fear of like AI plus money movement, because it's like, nine times out of 10 we'll do it right. But every so often, it'll just like do a different number.
Yeah, but like most of the hallucination stuff really comes from bad data. It's not the issue of the AI necessarily, it's the issue of the data that it's using, right? And so like when you have GPT or whatever, like hallucinate, it's often because it's some web scraping thing that's going on. And they're scraping some article that's 3 months outdated, and the PE number that's mentioned in there is shit. What's for us is a sense of like, we're directly tied into all the data sources in real time. And it basically is the layer in the middle of that, but it uses that data, right? It's not going out and being like, what's the 3 months old Yahoo Finance article that I can now, make a trade off and stuff, right? So that I think is the massive difference and where the quality difference comes in.
There's this like emotional security that comes from knowing like someone is looking out for me, is thinking about my money. Like the richest people in the world have tons of people who are basically doing this on their behalf, right? Thinking about where their money should go, bringing them the best stuff. And so when you think about like democratizing that, I do think there's something about the human element of it, or at least feeling like there's some human behind this thing looking out for my best interest. Have you guys thought about like bringing that element into the company where it's like financial advisors, or even just like the AI version of that, or AI powered, or letting a financial advisor that can manage thousands of people instead of 30 or 50 or whatever they traditionally have?
Yeah, I think there's two aspects. One is that the generation that's like our core demographic is more confident in their investing abilities because they grew up with more financial literacy earlier in their lives. They grew up in the markets earlier in their lives, maybe through crypto because they had a brokerage account way earlier. And so we always call it internally like they're self-directed first. They want some control over their portfolio and they actually don't want to give it up entirely to someone else to manage it. And because they also don't necessarily trust them because they understand it's not rocket science, it's just investing. Good line, by the way. Let me write that down. And that's one component. They want actually control over it and they don't want to give it entirely up. Then I think the second piece is that I don't know how much it is about a human versus the ability to get your questions and concerns solved. Mm-hmm. I think AI can do a lot there. And then it's more of a question of, do you have a human fallback that you know you could get to? Then necessarily, is the human the one that is responding?
Well, I think, like, I'll give you an example. When the market was just tanking or just weird thing or tariffs or things, a financial advisor will kind of like send out an email and be like, hey, look, this thing is happening. We're on it. Don't worry. We're here. Here's how we're reacting to it. I guess you could have a product that does that, that basically says, hey, look, we see this.
We literally have a feature in the app right now that's literally called Why Is It Moving, where if a stock moves in whatever direction, we'll give you a card with context of why this is happening.
Yeah.
And the same thing happens for your portfolio. There's a whole market daily brief breakdown that live real-time updates and gets additions to throughout the day that you always can tap on to see like just a general of like, okay, what's happening right now? Like everything is going red, like press that button and you get the breakdown of, that is literally adjusted throughout the day, completely AI, of the daily market breakdown. So like those things I would say are even like better with AI. And then I think the other piece is when something goes wrong, you likely want to talk to a human in most cases. Just from a perspective of understanding and feeling that there's just care there. And like we have a concierge team, for example, that if you have more than $500,000 in your account, you get access to concierge.
Oh, really?
So like you actually have someone that you know the name of, that you can email, and they can also jump on a call with you and things like that.
What's the background of those folks, the concierge folks?
They're like licensed brokerage reps and stuff, right? So like obviously in our space it's all regulated, and so like you actually have to have licenses, FINRA licenses and so on to be able to serve you and also to be allowed to even like look at your account and stuff like that. Like I as a CEO of this company, I cannot look at your public account. I cannot just log into my back office and look at your public account. I do not have that access.
Because you take it seriously.
Exactly.
The last thing I'm kind of curious, now you're well into this like second company. The next Leif who wants, designer founder wants to start a company. Any advice looking back that if I had to give myself one key piece of advice when I was starting out that you'd want a founder to have in their back pocket? Another way to frame it is like, what would you have told yourself when you were starting public? What's the advice you wish you would have given yourself looking back?
It's always tough because you learn with every step you make. And so it's like, I'm only here where I am now because of also the mistakes I made in the past. Mm-hmm. And so I don't know if there's like a magic wand I would have, gotten at that and so on. Like for me, again, like one of the biggest learnings for me, and this might be different for other people, is that what I said earlier, it's like, it's so much of a better journey and so much more fun if you're a power user of your own product. I've experienced both now, and it's just like, you care more about it. It's easier for you to be deeper because you have a better understanding of it. That for me was like one of the biggest things. But when I did Enco, it's like, when we were running the company, I really enjoyed like investor meetings, because we would talk about the future of work and like the change of the workforce and how many people are going to be freelance in the future. And like, and I kind of felt like these like big borderline academic kind of like discussions, and then I would, leave that meeting and go back to my desk and I have to look at SEO articles about how do I get my clients to pay my invoice. The reality is just like, I was thinking of like, okay, if I now would have a dinner with my customers at Enco, would I enjoy that dinner? Like the conversations that would happen at that dinner. Would I enjoy that dinner?
That's interesting.
Super honest, I could do it, all good. Would I enjoy the dinner? I don't know. Because the issues that people would talk about would be like, oh, I made this logo for this coffee shop and like they didn't pay my invoice for 6 months and what was the trigger for me to get it done? And like those would be the things, Now, if we host dinners all the time for our customers and like markets influencers and whatnot, like when we go to a dinner, I enjoy it because I sit there and I nerd out about the markets and I nerd out about, investing strategies and company building and, importance of company culture to performance and like why is a founder that company performing better in the public markets than a non-founder that company and like yada 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 like, and it's super fun, like, and I enjoy it and I get energy out of it and so on, versus draining energy. And so that's a little bit like the visualization that I put myself. It's like this like dinner table and like would you actually enjoy it or not?
That's a great like rubric. I mean, I think like one way to get that is by being the power user of the product. But I also think like, yeah, what you've tapped into is like you just weren't into that problem that much. And there's plenty of things I'm sure that you wouldn't be a power user of that are like things that you'd be super into and fascinated by.
I think that's super true. You gotta have a true love for the problem.
Yeah, exactly.
100%.
Well, on that note, I'll say thank you. I appreciate the time. It was just great to catch up, man. It's been too long.
Great to see you.
Yeah, and now I'm both like I have a, by the way, I have a public account. I've had one for a while.
Good.
But now I am very curious to do this like designer founder ETF thing. It also made me think like, well, designer fund is a private market version of that ETF. And it'd be pretty cool to also have like the public facing version. So something to think about. The gears are turning, sir. The gears are turning.
Set it up and give me a free tweet. Come on.
All right. I love it.
Nice. Awesome. Good to see you, man.
Bye, Leif. Talk soon.